For decades, the United States military-industrial complex has been considered untouchable, a pillar of American economic strength and global power. From the Cold War to modern conflicts, U.S. defense contractors dominated global arms markets, supported by massive Pentagon budgets and strong political backing. But today, a growing number of economists, investors, and geopolitical analysts are asking a once unthinkable question. Is the American defense sector entering a period of real decline? Recent market movements, policy decisions, and warnings from renowned economist Jeffrey Sachs suggest that the U.S. military-industrial complex may be facing one of its most serious challenges in modern history. Defense stocks under pressure, a market wake-up call. Traditionally, U.S. defense stocks were viewed as safe bets, largely immune to recessions and global uncertainty. Companies like Lockheed Martin, Raytheon, Northrop Grumman, and Boeing Defense benefited from long-term government contracts and steady defense spending. However, over the past year, defense stocks have shown increased volatility. Investors are becoming cautious as margins tighten, costs rise, and future contracts appear less predictable. According to market analysts, this downturn is not being driven by a lack of demand for weapons or security, but by policy instability, rising production costs, and shifting global alliances. Jeffrey Sachs has described this moment as more than a short-term correction, warning that the sector may be entering a structural transition rather than a temporary slump. The Trump factor, when America First hit the defense industry. Former President Donald Trump's America First agenda aimed to strengthen domestic manufacturing and reduce reliance on foreign suppliers. In theory, the defense sector should have benefited the most. In reality, the opposite may have happened. Trump-era tariffs increased the cost of key raw materials such as steel, aluminum, and advanced components, many of which are sourced through global supply chains. Defense contractors found themselves paying more to build the same systems, squeezing profits and delaying production timelines. At the same time, America's increasingly isolationist posture unsettled allies. Several NATO partners began exploring non-U.S. suppliers, not as a political statement, but as a hedge against policy unpredictability. As Sachs explains, modern defense manufacturing is global by design. Cutting off supply chains and alienating partners weakens rather than strengthens the system. Canada's quiet move, Mark Carney's strategic advantage. While U.S. defense firms struggled with political and economic uncertainty, a quieter shift was taking place north of the border. A new strategic agency associated with former Bank of Canada and Bank of England Governor Mark Carney has been steadily positioning itself as a credible alternative in defense-related investment and infrastructure coordination. Unlike Washington's confrontational trade approach, Carney's strategy emphasizes multilateral cooperation, regulatory stability, long-term institutional trust, and integration of defense, infrastructure, and climate-focused investment. This model has attracted interest from European governments, NATO partners, and global investors seeking predictability in an increasingly unstable world. Rather than competing directly with American defense giants, the Carney approach works around them, capturing market share through partnerships, financing, and coordination. NATO and the global shift in power. The implications go far beyond stock prices. For decades, NATO relied heavily on U.S. defense contractors. Today, alliance members are actively diversifying their procurement strategies. European nations are expanding domestic production. Canada is stepping into coordination and financing roles. Asian partners are forming regional supply chains independent of U.S. dominance. This does not mean the U.S. is being abandoned. It does mean America is no longer the default choice. Many analysts describe this moment as the most significant shift in global defense power since the end of the Cold War. Wall Street versus Washington, a growing disconnect. Another warning sign is the growing tension between policymakers in Washington and investors on Wall Street. Defense companies now face regulatory uncertainty, political risk tied to election cycles, unclear long-term trade policy, rising costs, and delayed approvals. As a result, institutional investors are spreading capital across Canadian, European, and multinational defense-adjacent projects, reducing their exposure to U.S.-only contractors. This capital movement is subtle but significant. Once investor confidence erodes, regaining it becomes extremely difficult. Jeffrey Sachs forecast, crisis, or course correction. Jeffrey Sachs is careful not to declare the end of American defense dominance outright. Instead, he frames the situation as a crossroads. According to Sachs, the U.S. still has enormous advantages: technological leadership, the world's largest defense budget, highly skilled engineering and research talent. However, these advantages are no longer automatic guarantees. If the U.S. continues down a path of trade wars, unilateralism, and policy instability, Sachs warns that the decline could become self-reinforcing. On the other hand, a return to cooperation, predictable regulation, and alliance-based strategy could stabilize and even strengthen the sector. Is this a collapse or reset? Some experts argue that what we are witnessing is not a collapse but a reset of the military-industrial complex. In this new phase, power is shared, not concentrated. Partnerships matter more than domination. Stability outweighs aggression. Economics shape geopolitics as much as weapons do. The rise of alternative models, such as the Carney-backed framework, reflects a global preference for quiet competence over loud confrontation. Conclusion: a defining moment for American power. The American military-industrial complex is not disappearing, but it is no longer unquestioned. Jeffrey Sachs's warning is clear. In a globalized world, isolation is weakness. Economic power today is built through cooperation, credibility, and consistency. As Canada and other players move strategically into spaces once dominated by the U.S., the coming years will determine whether America adapts or falls behind. One thing is certain: the era of automatic American defense dominance is over. What replaces it will depend entirely on the choices made now.